Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Okay, we're going to start getting into more detail with BYD. Obviously, this is a big one we should be concerned about as Tesla investors. So let's go over some information and numbers about BYD, go through some financials, review their products they have for sale, and see how many sales they're getting. It can be a little scary sometimes to take a deep look at what may be a fair competitor to Tesla. It can be hard to do it without blinders on. You need to be honest with yourself rather than just pick reasons to find Tesla is better. This is one of the issues I believe legacy autos have, along with their investors. They're too scared to look down the rabbit hole. This is known as cognitive dissonance. But that is where we're about to venture with BYD. First off, BYD has a market valuation of around $110 billion, compared to Tesla at currently around $730 billion. So Tesla is a significantly larger company. BYD has a PE ratio of 161 compared to Tesla at 385, although BYD's income is supplemented with their hybrids also. Yes, BYD is not an all-electric auto manufacturer. They started with hybrids. They also sell buses and trucks and other commercial products, batteries and electronics, along with energy solutions like battery storage. They're very vertically integrated also, and even make their own in-house batteries already. They are the company in the world that resembles Tesla the closest. In fact, it would appear that BYD are currently the leaders in LFP batteries. Their cost per kilowatt hour is meant to be around $70 compared to CATL at around $100, with an energy density of 140 watts per kg compared to CATL at 125 watts per kg. All of this is at the pack level. I would say that CATL are likely going to catch up with this soon, especially given how much they're investing lately, which is great news as CATL supply Tesla, and this would be a big improvement on what Tesla are already achieving. I guess it's good to see the potential LFP batteries have. Of course, they're not using Tesla's battery day technology, so when Tesla start making their own LFP batteries, that will be another major turning point for the company. That will be groundbreaking and result in electric cars always being lower cost than every ICE car. But right now, one of BYD's strengths is certainly their LFP technology in their Blade batteries, which they're also selling to other manufacturers like Toyota. BYD don't appear to be doing much in the way of FSD. Their vehicles do not even have LiDAR in them when compared to some Neos. Remember, for all cars to self-drive, they will need LiDAR in them if they don't use Tesla's FSD. Neo has a built-in LiDAR which looks a lot better than the other LiDAR systems, but still, this takes up valuable real estate in the car and adds to extra cost and compromises design. In other words, I don't think BYD will be offering autonomous vehicles anytime soon. This is a major disadvantage over Tesla. If they can't drive themselves, then consumers will discard them almost as fast as ICE. They want the future, and given that BYD price points aren't majorly under Tesla's, at least outside of China, well, then it's worth paying extra for a Tesla if it saves you so much time with self-driving. BYD actually sold over 100,000 units of their sedan, the Han, but believe it or not, the car is not designed electric from the ground up. It would seem they're struggling to let go of their past and go all in on electric. The Han has a hybrid version too, although around 3/4 of the sales have been for the electric version. But in total, BYD did achieve over 50,000 units in July alone of all their cars. Just under half of those were BEVs, which is around 75,000 a quarter. Tesla might not be far off 250,000 around now, so BYD is selling 1/3 as many BEVs as Tesla. That is quite significant. Tesla do however produce more BEVs in China than BYD. Looking at the financials for the first half of 2021, BYD's revenue was around US $14 billion, compared to Tesla's BEV revenue at just under $20 billion. However, this includes all of BYD's activities, not just their BEV revenue. But BYD came in at a gross profit margin of just 11%, compared to Tesla at 28% in Q2. Of course, this is BYD's margin for all their activities. There's a strong possibility that the margins might be significantly lower for BYD's electric vehicles. But we can see from last year, their margins were at 18%, the main difference being ramping up more electric vehicles. In 2020, BYD sold 130,000 BEVs and apparently 93,000 for the first half of 2021, annualized to 187,000 for the year, or a 43% increase. Could it be that BYD lose money on every sale of their BEV and are subsidizing their growth with their hybrid business? This is a major difference in profit. Tesla's profit margins are continually improving. BYD also have the lowest cost battery, yet still such low profit margins or possibly negative. Tesla are just that much better at manufacturing at lower cost. But think about how much more time and effort and research and development goes into a Tesla compared to how many models BYD are just pumping out. In the space that BYD have launched the Han, the Tang and the Dolphin, Tesla have launched no new models in that time. BYD are rushing them. Tesla can take their time to perfect design with manufacturing. Let's compare the BYD Han specs to Tesla anyway. The Han starts at around $35,000 US, excluding local Chinese subsidies. Yeah, remember that. All the Chinese cars are also benefiting from local subsidies. But this gets about 220 miles of range, compared to the Model 3 standard range with 262 miles of range. But the Model 3 is currently $40,000, although it has been close to $35,000 in the past. In other words, Tesla would have no problem still making a profit at the BYD price point. The most expensive Han is about $39,000 with 262 miles of range, so the price is about the same as a Model 3 for similar range. But the Han cannot achieve long range as they're only using LFP batteries, so it's limited to this range. In other words, just on range, the Tesla is priced about the same as the BYD, but it's a Tesla with all the Tesla extras. BYD have also gone in at the bottom of the market with their new EA1, also known as the Dolphin, which could be regarded as competition to the Tesla Model 2 possibly. So let's quickly go over some of the specifications. Now, the idea of this car is to offer really cheap EV, and they succeeded. Excluding local Chinese subsidies, it starts at around $16,500. This comes with a 30 kilowatt-hour battery and offers 187 miles of range NEDC, which is around 130 miles EPA. The top of the range version is around $21,000 with a 45 kilowatt-hour battery and 252 miles of range NEDC, or 176 miles EPA. So this is using the BYD's revolutionary new Blade LFP iron-based batteries. It has a 0 to 30 miles an hour time of about 4 seconds. That is slow. It does have a curb weight of 1,405 kg for the 45 kilowatt-hour version. The Model 3 standard range is only 1,610 kg. That BYD seems very heavy for such a small car. But remember, this car will still be limited to battery production. BYD can't make enough batteries to mass scale this car anytime soon. At the end of the day, the EV race to market share is all about how many batteries you have at your supply. All EVs will pretty much sell anyway, but you also need to make sure you can produce at a profit, or have another profitable business to subsidize your growth, which BYD has. Whereas legacy autos, well, their currently profitable ICE business might end up becoming a liability. This car is likely just to show how quickly BYD can launch models to market. Tesla don't bother launching models unless they're going to sell in the millions, which Tesla don't have the batteries for quite yet. So they would rather concentrate on selling the models they do have with a higher profit margin. Same for Volkswagen trying to launch a compact EV before Tesla with their new ID Life at something like $24,000 US, undercutting the Model 2. Oh, but wait, this isn't due out until 2025. And what does it Elon keep saying about prototypes? Something like any old fool can make a prototype, but manufacturing is hard? Oh, also, the ID Life is actually the most hideous EV I've seen so far. And that's the prototype. Can you imagine how much uglier the production car will end up being? At the end of the day, BYD will be limited by batteries just like everyone else. They've not only taken the initiative to supply their own batteries in-house, they've also designed their own LFP battery, supposedly more energy dense than CATL equivalent. But they still can't even really beat Tesla on price, at least not like for like. They offer cheaper versions of EVs that have significantly lower range, and perhaps there is a market there. I don't think Tesla will really touch any vehicles with range that low, so they may leave the budget auto market to another manufacturer. The thing is though, even despite BYD's vertical integration and their own revolutionary new batteries, and even with them barely even undercutting Tesla's price points, it would appear there is a very small gross profit margin here, if any, and then when you factor in all the operating expenses, then without a doubt, BYD are still losing money with their EV business. BYD's brand is not as strong as Tesla's. Tesla has so much more goodwill that consumers are willing to pay extra just because it's a Tesla over a BYD, implying BYD cannot raise their prices and must remain competitive as a cheaper version of Tesla, which they're only able to achieve with very short-range vehicles. But like I said, even doing that, they don't appear to be making a profit. Remember, mass production with positive cash flow is excruciating. That's excruciating for someone as smart as Elon Musk and as talented and resourceful as the Tesla team, full of innovation. So how hard is that going to be for a Chinese company 1/6 the size? This is my summary so far on BYD, but I think we need to do some further research. This is just my preliminary research. Of course, as always, it's going to be great when all of you add your comments too, and perhaps we can get to the bottom of it all. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.